Welcome back to Chairman's Briefing. I'm your host, Rachel Lee. This episode is brought to you by Vizsla Copper. It's a pivot, to say the least, from Wall Street. Goldman Sachs has raised its year-end target to $3,100 per ounce, which is a remarkable shift, considering that the bank pushed its $3,000 forecast to mid-2026 just 6 weeks ago. This rapid turnaround highlights gold's persistent strength in early 2025. Now, behind Goldman's revised outlook lies a deepening trend in central bank purchases. These institutions are already significant buyers throughout 2024 and now might be buying at an average of 50 tons a month, which is more than previously expected. In Asia, the People's Bank of China expanded its holdings for a third straight month in January. Other officials included Poland and India, according to the World Gold Council. Gold prices have surged 45% over 12 months, decisively outpacing an 18% gain in global stocks. Should uncertainty over economic policy persist, including on tariffs, Goldman says that bullion could hit $3,300 an ounce on higher speculative positioning. Silver demands attention as both an industrial metal and investment haven. It's a dual identity that sets it apart from gold. When gold prices make decisive moves, silver historically responds with twice the intensity. Yet, this reliable pattern played out differently throughout 2024. While gold powered to consecutive records, silver carved its own distinct path. The metal swung through an unusually wide trading range from $22 to $35. For perspective, silver's range in 2023 sat between $19 to $27. This deviation from typical behavior reveals just how silver's industrial demand can significantly impact its precious metal status. Market watchers note that any global trade tensions could impact manufacturing demand, the sector that consumes half of all silver production. This industrial exposure creates price dynamics that no other precious metal experiences. An intriguing financial opportunity is sitting on U.S. Treasury books. America's gold reserves remain officially valued at $42.22 per ounce, which is a figure that's frozen since 1973. With gold now trading near $2,900, this creates an extraordinary and untapped resource as U.S. debt surpasses $36 trillion. Digging a little deeper into the math here, we can see staggering potential. Each $1,000 increase in gold's official value could add $1 trillion to Treasury accounts. This calculation gains relevance as the Treasury Secretary discusses, quote, monetizing the asset side of the U.S. balance sheet. The timing is also drawing attention as interest costs on national debt project to reach $1.8 trillion by 2035. The latest earnings season has divided gold producers. Barrick shares have jumped 7% on strong profits and doubled cash flow, and Kinross stock have dropped equally as much on production shortfalls and delayed buybacks. Kinross posted higher earnings at 20 cents per share versus 11 cents in 2023, yet production slipped to just over 500,000 ounces, which is down from about 550,000 ounces last year. The company's decision to postpone stock repurchases until later in 2025 drew criticism from analysts, despite healthy projected cash flows of 8.5%. These contrasting market reactions highlight how investors reward strong execution while punishing missed expectations in today's gold market. RBC analyst Josh Wolfson called Kinross's delayed capital returns disappointing, given the company's healthy cash flow outlook. Shocking to some, SSR Mining stock has fully recovered. 1 year ago, tragedy struck the company's copper mine in Turkey when a heap leach collapse claimed 9 lives. The February 2024 disaster sent the stock plummeting, and today those losses have been erased. Fourth quarter results tell a complex story. Revenue beat expectations at $323 million versus estimates of $262 million. Yet earnings missed, coming in at 10 cents per share against 19 cents that was projected. The company produced about 124,000 gold equivalent ounces at costs of $1,857 per ounce. Copper suspension drained about $108 million in maintenance costs. The market appears focused on restart potential, though. SSR Mining reports copper operations could resume within 20 days of permit approvals, processing stockpiled ore and ore from nearby deposits. Despite offering no firm timeline, investors drove shares up 13.5% following the news. This reaction suggests that markets see value beyond current operations. Ground surveys at Vizsla's Copperview project in British Columbia reveal a broad and open-ended chargeability anomaly at their M5 target. The survey results indicate potential for porphyry-style mineralization beneath the surface. Vizsla has outlined next steps. Spring exploration will expand ground surveys, add soil sampling, and include the project's first drill program. These overlapping survey results warrant thorough testing, according to their exploration chief, Steve Blower. Agnico Eagle Mines is inching just a little closer to claiming the title of world's second largest gold producer from its top rival. According to a full year earnings report, Agnico targets production of 3.3 million to 3.5 million ounces in 2025, matching current second-ranked producer Barrick Gold. Yet Agnico CEO Ammar Al-Joundi dismisses the ranking race, saying, "We've never cared about whether we're bigger than these guys or those guys. We only care about growing value per share." The two Toronto-based miners are carving very different paths. Agnico built its position through Canadian consolidation, growing from Quebec roots to operating 11 mines across 3 continents. Barrick pursues a different path, spreading across South Asia and Africa. We'll see how both strategies play out as the industry faces pressure to replace aging mines. Meanwhile, Newmont is maintaining its lead, targeting 6.4 million ounces for 2025. New Gold is mapping an ambitious growth path for its Canadian operations. The miner has extended life at both New Afton in British Columbia and Rainy River in Ontario through strategic investments. New Afton's copper and gold reserves climbed 15% and 13% respectively, pushing operations to 2031. The company projects significant production increases. Gold output targets rise 16% for 2025 to between 325,000 and 365,000 ounces. By 2026, production could reach 490,000 ounces, which is a 55% jump from 2024 levels. Meanwhile, copper production at New Afton eyes a 94% increase by 2027. CEO Patrick Godden emphasizes a turning point in cash flow. The company expects costs to drop sharply, with all-in sustaining costs projected to fall 70% from 2024 levels by 2027. This combination of higher production plus lower costs positions New Gold for substantial free cash flow generation in coming years. And that's your briefing for this week. Make sure to leave us a comment. We read every single one. And if you enjoy this kind of content, share it with your network. I'm Rachel Lee, and we'll see you next week.